And welcome to Making the Market Easier. My name is Phil Grandy at philsgang.com. I've been doing this for over 50 years, teaching for 25 years, and I'm going to help you today to make it easier for you, this market, because they can make it pretty complicated. First, let's take a look at what's been going on in the last few weeks. If you notice, the most important yield is the 10-year Treasury yield. You notice how it's been dropping, that 10-year Treasury yield? Well, that sends a message when that 10-year Treasury yield drops. That means, looking forward, the economy, is getting worse, not better. And the bond yields are so important so that you can, don't listen to the noise. Every time I see yields going down, I'm going, things are not doing well. And I looked at the yields also because they never tell you the truth. They're telling us that the economy is doing really well, the consumer's doing well, and none of that is true because the discretionary stocks are getting hit hard. The retail stocks are getting hit hard. And it's amazing if you go look at the quit rate, how many people are quitting their job? Cut in half. So that tells you people are fearful of leaving their job. So when I hear that kind of noise, I just block it out and I go to my yields. It always tells me the truth. And the one thing I also look at is TLT. That's the 20-year one. The 10-year and the 20-year, both important. TLT, if the TLT is starting to go up, let me show you what I mean. And this is another great indicator right here. Let me just get rid of this and I can get to it. Here I am. All right. Let me just put this in here. TLT is a great indicator as well. That's the long bond. And if TLT, if the yields, are going down, then that means your TLT is going up. And you can see this, TLT's been going up. And that means your yields are going down. So I got two areas I go to get proof. My 10-year and then the long term. And again, if I see TLT itself going up, then I know yields are coming down and vice versa. Now, when I do that, the next thing I go look at, and I don't listen to the noise, I look at the banks, because believe it or not, the banks, not the tech, lead the market, especially now that we're trying to break out through this February 19th high. Now, look at Citibank, for example. If you look at Citibank right here, look at the similarities to this. Here's your Citibank. We've been going sideways now for about 28 days, and this is not an exact drawing. See it right there? Now watch this. Now if I switch over to the spiders, look at that. You can't even tell the difference. So the proof there is telling us that, the yields are going down. That's not good. The short term and the long term. And then I look at the banks, and the banks aren't breaking out. They're not breaking out. And it shows that the S&P looks just like Citi. See right here? Same thing. So what I do, I look at two different kinds of stocks then. If I know that's the situation, I'm going to stay with my strongest stocks. And like, for example, I call them power stocks. When you get down days, here's one stock I bought right here, RTX. When you get a down day, hopefully 300, 400, 500 points, you can find a stock that has relative strength. And that's what you look for in down days. Stocks that have relative strength that don't go down with the market. We did very, very well on this stock. Another stock we did was Micron Technology. See that? Beautiful. It worked out perfect, Again, relative strength. It's telling me this stock is stronger than the market, and I proved the things aren't getting better for the market because you can see what's going on with the yields. And then what I do is I switch also to shorting, and this is the problem. In the last 50 years, 85% of people who trade stocks lose money. 85%. You want to know why? Because all they do is buy stocks. They're so fearful of shorting a stock. And you don't have to be, especially with the ETFs like the spiders, or the NASDAQ. You can do an inverse. So you're not actually, you're shorting them by buying them, okay? You just do an inverse. So like spiders, for example. If I do a spider for you, just give you an example here. Watch, spider. There's your spider, and here's the inverse, SDS. So people are afraid to short, right? So if let's say the market starts breaking, Powell says something today, and the market starts to break. Well, if you're going to short, you got to pay $597 a share. What I do is I switch, and I do an inverse. I buy SDS. And so just the opposite. I only have to pay $18 a share, and it goes the opposite way. It goes up. So as your spiders are collapsing, going down, just switch. And if you get scared shorting, just do SDS. And it inverses, and you watch it go up. And the higher it goes, it means the market's going down. But overall, I make sure when the market's going down, I'm looking for real strong stocks, real powerful stocks. And those I find as each time we get a pullback in the market, I can find these stocks that aren't going down. Also, the other thing is discretionary stocks. When you have a weak market, okay, and discretionary stocks are the first one to gets hit hard, and those are all your, like we have, for example, our McDonald's has done very, very well, okay? We've been shorting McDonald's, we've been shorting Costco, anything that's discretionary. And discretionary means anything that is that you don't have to have. You don't have to go to McDonald's, okay? You don't have to go to Costco. So just give you an idea again. So here's McDonald's. Right there, look at that. We did a beautiful short. Broke right through that 200-day moving average. Nice short. And we did, again, Costco. A nice short, okay? Beautiful short. And that's why, again, you got to learn how to sell short. And for people who say, I'm scared, then don't do the individual stocks. Just do the ETF, like the spiders. You can do the same thing with the Qs. You do the same thing with the NASDAQ. You can do an inverse on the NASDAQ. So you can participate without being fearful. Now, also, we're starting to see where we're being told that Powell is going to now finally start lowering rates. Okay, well, let me tell you, the reason he hasn't been lowering rates is because he's scared of the deficit. Okay, when you cut rates and people start spending and they go through their savings and they start borrowing and they get in debt, like now, okay, and the economy slows right down. And what happens then is that the government, again, spends more than they take in. So the more the economy slows down, they keep spending more than they take in, so they have to start borrowing. They have to borrow, right? The government has to borrow. So the problem is that for him to go back and to start cutting rates, and we have a $2 trillion deficit, and deficits are a killer because your national debt goes up. There's all kinds of bad things that happen. You get higher interest rates. So I don't think he's going to do that just to satisfy the president. I just don't see it. So the bottom line is stop listening to the noise. And the one last thing is we also have a chart that makes things so easy that you can use with your chart, okay? And it's called my Pro 2 chart. And again, it will tell you, and again, you use it with your chart, but it'll give you great confidence when you go to short a stock because it will tell you in advance. It shows you if the money in your stock is starting to come out. And see that little sweet spot right there? That's called the sweet spot right here. That's the point in time where you get the maximum amount of sellers in a short period of time. And when you're trading, all of a sudden you suspect your stock's going to go down, switch to your Pro 2 right here, and you can see if it's changing from green, okay, to red. And the other nice thing about that chart, it will always tell you, and again, it will work with your charts, it will always tell you what money is doing. Is it coming out? And it'll even turn yellow and tell you it's starting to change. Money's coming out of your stock. Now it's going to start going in your stock. And there's nothing better when you get a beautiful signal of a buy signal to buy when it goes from red to green. And again, you buy it right inside this nice, powerful area right here called the sweet spot. Again, where most buyers come in a short period of time. And so while you're trading and you need some confidence, boy, is that a confidence builder, and it works right with your chart. So, but again, let me just say this. I do not believe, okay, it's important whether or not we break out through this February, because it doesn't matter to us here at Phil's Gang. Because if it breaks out, we'll go long. If it breaks down, we go short. And see, that's the beauty of having both skills, because it doesn't really matter, does it, at the end? We just follow the money. And the only way you can follow the money if you have both skills, shorting and buying. Otherwise, you're depending on noise. And that's why 85% of people lose money in the stock market. So that's it. I'll see you again next week, same time, and I hope I'm helping you. And check us out, okay? Just go to philsgang.com, all right? And again, just try it. It's 10 days. It's free, all right? Okay, so I'll see you at the same time, same place.